Good morning. It's March 2nd, 2024, and it's the Wall Street Weekly Wrap Up with your host, John Newquist. And where did the time go? Interesting week. Less earnings, but some big news. Let's talk about AMGN because we added that to our portfolio. I think it's the next GLP company to go up. Now, AMGN reported earnings, which were low, dropped, as you can see, from the 300s down to 280. But everybody's watching the GLP. Remember, this is Ozempic, this is Lilly's drug, this is all the things that people are watching for obesity. So, if AMGN joins the club, it could easily double. If it doesn't pass, like Pfizer's, then it's going to go down. I like AMGN's track record, and that's why I think it's going to be one of the ones that we're going to bet on. Again, it's a tough issue. AMGN typically goes down after earnings, but not always. So we'll see. I think it's good. If I had to pick another company that's going to go good, it'll be AMGN. Bitcoin, holy smoke, 64,000. I mean, look at these big jumps. Flat, then up, down a little bit after the ETF is up, and now we're up at 64,000. The thing that everybody's talking about is the halving event, and that's what a lot of people have no idea. They think that the Bitcoin price is going to go half, and that's not true. When they mine and verify the Bitcoin transactions, these miners get part of a Bitcoin, and every 210,000 of these transaction blocks, they're going to sit there and get less Bitcoin. So it's going to go from 6 Bitcoin to 3.2 for the halving. That means, right now they've been getting, so many thousands of blocks of transaction. They get so much Bitcoin. Ryan Group says $7,500 to mine 1 Bitcoin. So when you're at $60,000 and the cost is $7,500, yes, there's electricity costs, but holy smokes. Remember, this is at $20,000. Now, Ryan wouldn't talk about the cost of the electricity to mine a Bitcoin and everything else, but the total cost, everything, $7,500. So we don't own Ryan, but we own BT, which is another one. Everything the miners are lagging tremendously. So that is a place to get in if you want to get on the Bitcoin, because they mine the Bitcoin, hold the Bitcoin, and they're going. MicroStrategy went up 50% in the last month, and that's because they hold pure Bitcoin, but these companies are holding it. They're making money, they're making Bitcoin. Yes, they'll make less per transaction, but as they ramp up more production, that means more equipment to mine Bitcoin, they'll do more. So I think that's your way to get into. Get into a Bitcoin mining company that's publicly traded, and eventually it'll catch up after the mining is in April. We're looking at April, mid-April. It's going to go in there after they mine so much of this, and they're going to go in and get less per transaction, but they're going to ramp up. Remember, they have the Bitcoin. They own the money, and that's the key thing. The indicators, wow, like everything is up. We go in there with crude oil, it's up there. We're up almost $80. I mean, it's getting close. And of course, if you're at the pump, you've watched it go from, like in my town, $2.99 to $3.79. So 80 cents up for, going up $10 a barrel. So that's a lot for a lot of people. Gas is still below 200. We're past the winter time. It's not going to go up too much more. Remember, we get gas every time we drill oil. And then gold, look at the chart. Holy smokes. We're right at the level, almost a record high, if not a record high. And that's it. Gold just chugs along. Now it's going to go sideways. Will it go up? We don't know. People are talking $3,000 gold, but they always talk about $3,000 gold. It is always a good time to buy gold by every single gold seller. There's never a bad time to buy gold. So just keep that in mind. But it's not bad. If you own gold, you bought it at $1,600, you're doing good. Just hold on to it. Remember, gold is something you own. You don't trade. It's just part of your portfolio. It should be any metals, no more than 5% of your value of your portfolio. And same thing for Bitcoin. Don't be putting a lot of money in Bitcoin, like 40%, like some people, betting everything, because it can crash. The averages, wow, all of them up. You sat there in bonds making 4.5% or 0.5 per month, and you're down a lot compared to the averages. 0.5. If you just bought the S&P, you have lost 14 times that money by sitting in the bonds. Is it going to go up higher? I think it's going to be a good quarter. U.S. earnings are very good, very strong. Semis are taking it up, but everything else, it's just not, technology and semiconductors. Sherwin-Williams hit an all-time high. Um, we get Merck doing well on the high. Medical's doing well. A lot of things are happening. So it's not a bad time to be in the market. And you can always buy the index, or you can start picking on some of the ones we have and, just own a little bit of it and ease into it. You don't have to put everything all at once on a stock. You can go in, buy 1/3 of it now, buy 1/3 of it later, 1/3 of it at the end, or do tenths, or whatever you want to do. You don't have to ease into this and come in 100% in the stocks right there, because you want to sit there and get it on average. But everybody's watching the small cap. Holy smokes, Russell 2000 now positive. So everybody's got a record night now, and all the charts say if you're positive November, December, January, you're going to be positive for the year. Well, this is it. I mean, we're going to look at it. I think we'll sell off a little bit in May. I think the earnings cuts for the Fed rates, probably 2 a year this year. 2. That's my number. Oil rallying, rallying, rallying. Look at this wedge for COPD. Above this 50-day, above the 200-day. A lot of people pushing $100 oil. We've been talking about it a long time. Got a lot of oil pumping out. So something has to increase. The China economy has to increase. The U.S. economy is great. European economy has been flat. So, if one of them takes off this summer, it's going to be a lot of demand for oil. So that's why you got to be in energy. We are Exxon, ConocoPhillips. And then Vertex. This is our screamer of the week, I want to call it. This is, again, another GLP Doug. One going in there trying to make an Ozempic clone, or a Lilly clone. And look at this thing jump. Holy smokes. It doubled in a day, then tripled, and wow. It's a casino. You missed a run. You can just sit there and say, I missed it. That's why I said we looked at AMGN. AMGN, more potential. This one's tough because, sometimes it comes back down to $40. Yeah, you can say I got 100, but boy, you're buying momentum. I mean, when it's parabolic, that's a tough time to buy. That's a tough time to buy. Snowflake, CEO left, earnings, they disappointed. Now, I thought revenues went up pretty good, but people are talking about, like I said, CEO leaving is never good. Now, he was on TV talking with his new new president, or the new president's talking about he's going to the board and everything else. But here's the problem that I run with Snowflake is they were supposed to be AI before AI. When they came out, they were going to analyze all the data in the clouds they have, and they were going to be able to help the customer because they had the proprietary information. And we find out other companies are doing it. Google and Microsoft and Amazon, they're going to beat them. I have no doubt about it. They're going to spend billions of dollars for all the top AI chips to make it easier. And I just don't see Snowflake doing that. They can't afford the money. They don't make that much money compared to, 770 million. I mean, you think about Meta. Meta's going to spend over $1 billion on chips alone, more than Snowflake grosses. So I think it's going to be tough for Snowflake in the future. I'm not a fan of it. I think they were AI before AI, but then it's not been really true. Lowe's. This is a mystery. I mean, sales fell 17%. Let's just raise up and go up to a, almost a 52-week high. Like, wow. Home Depot, not much better if you remember, but we watch it because do-it-yourself spending's down. Pro, which is their contractor division, is down. They said blame weather. I hate it when retailers blame bad weather. It's called the internet. They go drive and pick it up. They don't have to sit. I don't buy the bad weather excuse anymore. And first half should be like the quarter. I don't know. This is a lot of stuff. The housing's up. Interest rates are not coming in March. Maybe June, July at best. At best. That's when you would want to buy Lowe's, but everybody seems like it's going to price right now, and I think it's a high risk to reward. I mean, if it was down over here, maybe. Down over here, not so bad. TKO, one of our holdings, WWE and UFC and, just record revenues. I mean, this is going up. Their losses, and the reason I look at this is that this is a company that knows what they're probably going to gross on pay-per-view on the gate, and they're losing money. This is bad management. When you blow $333 million on your revenue, then you've got an issue. You're spending 60% of your money on expenses. The overhead is way too high for what you're doing, and they got a lot of issues. I mean, they could fill the stadiums, they could do it a lot better, but they need to, get somebody in there with good financial management, a good CFO that cuts cost and looks at the things and does the events, not cut the events. They have capacity, they fill it, but the trouble is they're not doing it. They do a lot of stuff at the Apex for UFC, not a lot of revenue per venue. You could be in there doing 48 cities, packing it, getting multiple. I could double that revenue if you got a decent manager and organization. Double it. Why are we having every other week a UFC at the Apex? That's nonsense. These people will go to Chicago. We haven't had an event in 4 years. They'll pay. Just put a couple good tickets on it. People will pay. You'll make the money. And I know we got a great deal with ESPN Plus coming up, and that'll do well. But I always look at this is a company that should be making a fortune, and they're blowing a lot of money on overhead and salaries also. And it's not the fighter's salary; it's a lot of overhead. So I think like I said, they need to get some financial discipline. But we like it. The revenues are up. It's going to be up. It's going well. The endorsements are going. The pay-per-view is going, and a lot of positives. So just a little financial management. Like I call it the Zuckerberg moment. We're going to cut expenses. We're going to deal with it. They'll do well. It could easily double. All right, we go in there. I just did something neat. We picked some of these. Look at this stuff. If we look at quarter-to-quarter revenue growth. Now, I mean, it's not the price increase. This is just what they're growing in revenue of the stuff we have. And, the S&P average is 5%. And we've got companies that are double that. That's important. If the average company is reporting 5% revenue, we want companies that are growing revenues and faster than the S&P. We don't want lows at minus 17%. We want companies that are good. So NVIDIA, there's nobody up there like that. NVIDIA, 265% increase in revenue. ELF, everybody's like, as Abby puts it, well, that's what you buy when you don't have a lot of money. Well, obviously, it's doing real well at 31% growth, and for cosmetics, it's going. Meta, again, Facebook, it's got AI. You see it. The minute you talk about it, it's on every single thing from Instagram, Facebook, X. It's out there. That's the AI. That's true AI. You know what you're talking about. You search it. Next thing you know, you're getting ads in the Facebook. Hey, by the way, look at this bathroom mat. Look at this shelf. Look at this chew. And again, Microsoft. I mean, these are trillion-dollar companies, and they're growing revenues like they're a startup. And then Amazon, of course, the king of retail. I mean, that's not bad at all. 14% added to the Dow. Finally. Of course, NVIDIA, $2 trillion today, not added into the Dow. That's incredible. I mean, it's absolutely incredible. I mean, I told 4 years ago, put IBM out and put NVIDIA in. No, I got grief. I was like, come on. You look at the growth; it's no difference. IBM's old school tech, growing slowly. And again, Google getting a lot of flack right now, and it's because the fallout from the search. Founding fathers showed different people of not your typical white Anglo-Saxon founding father, showed people of color, and that got people upset. They withdrew the image search. It's just a repair. It's a mess up. They'll fix it and go on. ARM, again, tied with NVIDIA, has gone up the best of all our stocks. And then JP Morgan, you think a financial can go up 11%? They are. They're doing the best of all of them, always setting a new 52-week high. So, again, we buy the best in each sector. We look at the heat map. Wow, look at Microsoft we own, NVIDIA we own, Amazon we own, Meta own. Miller, too high, too rich right now. We're, it'll come down, but, why are they high? Because of the GLP-1 drug. It's doing well. So we got Novo Nordisk. That's not on this chart here. So we're doing, hey, look at this, Merck. Another healthcare that's doing real well. So we try to be good in the area. JP Morgan, And our utilities are horrible. I mean, we know that ExxonMobil's doing good for the year. We're trying to work with the different companies and try to get the best sectors. So, see you next week. Have a good week, and I enjoyed it. Have a safe, warm March.